before we get into the meat of the methodology, I want to first talk to you a little bit about why you might want to use scalping or short-term trading as either a part of your overall approach to trading the Forex or even as a standalone way to trade. First of all, this technique is a great addition or supplement to a longer-term strategy. So say, for example, you're a swing trader, longer term, or more of a position trader. These trades are just a great way to add pips to your account while you're waiting for longer-term setups. Okay. Now, I just want to clarify what I mean by scalping, the way that we talk about it, or short-term trading. It's a trading technique for capturing very short-term trading opportunities. Typically, the profits aren't huge in terms of pips gained, but that doesn't mean that trades that start off as a small scalping opportunity can't turn into a much bigger profit. They certainly can. But if I had to give a number for the kind of pips that we're looking for at the very, very minimum, you should be seeing, a very minimum of 10 pips. It's more like 15 to 20 pips. You've seen Shirley's spreadsheet. She's averaged like 25 pips on her average gains, but with the potential for a lot more. And of course, we'll go over all of that later on. I'm going to show you examples, so just don't worry about that. You should find quite high accuracy with short-term trading, okay? But the one thing that you do not want to do, and I've seen this before, you do not want to compromise sound risk management just to get higher accuracy and small pip gains, okay? One of the strengths of this approach is that you're going to learn here is that the risks are kept very, very small always, okay? And I want to say something else right now. I think I saw this question earlier in the Q&A, or in the before we got going. Some of you might be tempted to say, well, if it's so accurate, why not risk more? Okay? If you're going to do that, okay, you got to do that at your own risk. The thing is, everybody does things differently and according to their own risk tolerance, etc. That's for you to answer. One thing you have to understand about trading is that you never know what's going to happen next. Okay, that's a fundamental law of trading. Also, always plan on how you'll handle a situation that goes south on you, that goes the wrong way on you. Okay, listen, we really want all of you guys to make money with this approach. It works super well. All you have to do is copy what Shirley's done. Okay, but capital preservation is at the very heart of sound trading. Okay. Now, as for scalping itself, the way that you trade is going to depend a lot on your own time availability for trading and for the specific setup that we're going to be showing you for the London close. Obviously, you got to be available for the London close. But the technique that we're going to be showing in the London close setup can also actually, you can use this for any higher time frame support or resistance level. So it does work at other times. Okay, so you might want to take it and adapt it to another situation. That's up to you. We're showing you a London close setup. Now, one of the really nice things about taking shorter term trades is you get really nice fast feedback. Mark Douglas, in his excellent book called Trading in the Zone, if you haven't read that, you should get that book. Mark Douglas, Trading in the Zone. He talks about the need to take at least 20 consecutive trades using the very same approach over and over and over before deciding on whether or not it's any good. Or just as importantly, whether or not you can even do it. Okay, because it doesn't matter how good the method is. If you can't pull it off, it's useless, right? Taking 20 trades in a row can be more difficult using a longer term approach. Why? Because of time. The amount of time it takes to complete 20 trades. Most people have a very hard time waiting for 20 setups if it means waiting for like a month to get them or more. But with scalping, you can have 20 trades within a matter of a few weeks or even less, right? So with short-term trading, having the measurable results that 20 trades gives you, assuming that you got to have a profitable methodology in the first place, instills confidence very quickly compared to a longer-term approach. And you know what? Confidence is a personality trait that is vital in anything that you want to do well at, right? Pretty obvious. When you scalp properly, and by that I mean you follow the parameters properly, accuracy is typically far greater than other longer-term approaches. And again, it just builds even more confidence, kind of a snowballing effect, knowing that most times you're going to make a profit. In this course, we're going to show you how to manage several currency pairs at once. Somebody was asking about that. Very easily, so that you're alerted only to those pairs that qualify and that you have the most ideal setup. Okay? Now, that does not mean that you need to take all the setups. And in fact, when you're starting out, doesn't this make sense? We just highly recommend just watch a few pairs until you're more seasoned at the methodology. Make sure you get it first, okay? All right, let's talk a little bit about why the London closed.
I'm going to interrupt you.
Sure.
You can also go down my spreadsheet and take a look at those that look like they the pairs that look like they have the best results. You're going to find they're the lower volatility pairs, like the Kiwi, the CAD, etc.
Yeah.
So,
Okay.
just take a look at that spreadsheet. I think
Okay.
that'll guide you. Sorry, Vic.
No worries. Thanks for that, Shirley. Good little clue there.